Hi, I'm Andrew Berman from NMP, and you're watching National Mortgage Professional of the Month. With me, I've got a man who was doing non-QM before most of us even understood what non-QM was. His company, ACC, was one of the first non-QM lenders out there. We got Robert Senko, who is president of ACC. Robert, thank you so much for joining us.
Thank you, Andrew. Thank you for having me today.
So listen, I love the article. I loved actually getting into to know a little bit about your history and going actually into a deep dive of the world of Robert Senko. And your roots are are in the portfolio alternative lending. And I mean, really back then it was a lot of subprime. So talk to us a little bit about actually, how this is so much different. The stuff that you saw going on, in the 90s, and then the way the business changed in the 2000s, and how much different it is from the business that you're doing today.
Well, I hope you have hours of tape because I can talk for hours.
I know. I love it. I mean, you and I have had chats about this, and I love it. So please educate, share your knowledge with us.
So great. So hopefully I can impart a little bit of wisdom. When I started in the industry in 1992, the first loan I did was for a woman by the name of Mamie. Mamie lived outside of DC. She had a lot of credit card debt that her and her husband had ran up, and the only lender I could find was GE Capital. In a foregone time or a bygone time, GE had their own mortgage company. The cost of that in 1992 was $11.99 and 2 points to GE Capital. But that loan rolled up all her debt, saved everything, rolled it up into one payment, gave her a better tax advantage, and she was saving like $600-700 a month, which was a lot of money. So it felt good to be able to do something like that because she had been turned down by her bank or her credit union for, because she had some dinged up credit. So that kind of inspired me to do my first loan. So during that refi wave, when rates were super low at 6 7/8, that was, whoa, this was mind blowing. Rates had really dipped, they were so cheap at that point.
Yep.
So that's where, I cut my teeth and learned the industry truly from the ground up. I liked it. I had an affinity for it. I grew and evolved with it. I think in March of 1993 or 94, when rates spiked up, all of a sudden, all these companies kind of shut down. The refi wave was over. I was approached by a friend of mine who happens to work with me today, Brian Dacey, about helping set up a wholesale operation for a company here locally in Washington, D.C. I could barely even spell wholesale, so, but I wanted to learn, and it seemed like a great opportunity to kind of be my own, lead the charge and put my fingerprint on. So we grew that and we evolved, and we were ultimately kind of acquired by Cityscape. That was a company by the name of Home Mortgage Center that is no longer around. They were really a retail operation that was looking for other business opportunities. Cityscape comes in and is one of the first to utilize the securitization model for B and C lending. And that's what we called it then. We didn't call it subprime, we called it B and C lending. Yeah. And that was really incredible because it afforded me now an opportunity to go in to all these broker shops and see what they did. I saw the 2-man shop, I saw the 200-man shop. So I got to see a little bit of everything. I did really well with that. I enjoyed it, but my entrepreneurial blood started kind of bubbling up a little bit. So in 1995, right before my 26th birthday, I had made money in the stock. I had made money and I was single, no girlfriend, nothing. I said, this is my opportunity to try to start my own business. So I started my first company by the name of Senko Financial. Yes, I named it after me. A little bit egotistical at that age. So I apologize for that. But that was great. I learned a lot. I learned about building a business, running a business. And then, shortly thereafter, I kind of hit a plateau, and a company, not to be named, I don't think we should name it on this call, no. But we acquired me and allowed me to kind of spread my wings a little bit, bring some of my institutional knowledge. to the industry or to that company. They were primarily an FHA shop, and they wanted to get more exposure into the B and C world that was growing. So that gave me an opportunity to kind of expand my branch a little bit. I stayed with them for a few less than 2 years. That didn't really work out, but it was a great lesson. Bounced around a little bit, and then said, well, I'm going to set up ACC Mortgage using all the lessons that I had used in my illustrious, probably 7-year career at that point, to build a company that was safe and sound. We had just came out of a little bit of a hiccup in the capital markets, long-term capital management, if you remember that, the Russian ruble crisis. So a couple companies were squeezed, and it's important when I reference that because I started seeing those similar signs in early 2007 when the capital markets were obviously on the brink of some major issues.
Yeah.
From
now,
there,
I just, but before you go, I got to say, I just got to comment on something. So you say it's egotistical. I'm gonna call BS on that. I think actually what it is, and you know, tell me if I'm off here, but you're confident about what you do. You're confident actually about the service you provide, and you wanted to stand behind it. But putting your name on it was an important thing. I think actually it's not an egotistical thing. When you're confident, you know actually you're doing the right thing for the customer. When you whether it was back then for Senko or today with AC and ACC, you know, you stand behind it, and you know this is one of the reasons why you are a CEO, president that's out there, very public and very much engaged in the industry.
well, I appreciate you saying that. You know, a quick pivot. When we hire new people, whether they're sales or ops people, I tell them that the mortgage industry, and particularly non-QM, can be broken down on 3 points and 3 points only. And this has been universal since I got into the industry in 1992, and it stays true today. I know if a deal is a good deal or a bad deal based on these 3 points. And it's nothing that you haven't heard, but it's something that has guided me, and I try to impart this. Number one, ability to repay. Okay. Number two, skin in the game. And number three, to your point, is benefit to the borrower. You really have to look at the borrower and their situation and understand that, gee, you know, grandma can own her house free and clear, but giving her a loan that she can't afford, yeah, the lender won't lose money, but grandma can't afford that home. So if you truly sit in the position of the borrower and make sure that you're doing something good, that prevents a lot of problems. And knock on wood, that's why we haven't had major defaults. That's why we've never been sued. That's why we didn't get deep into the stated income business and, you know, make bad loans, because we looked at it from that perspective. And that's a hard discipline. Everyone kind of talks the talk, but when it comes down to saying no to somebody because you don't feel you're putting them in the best position, it not only protects them, it protects us, it protects, you know, the investors, Wall Street, however we package those loans. So everybody truly wins. So that short-term pain of saying no is mitigated by the long-term pain that can do that. And now with the change with Dodd-Frank and the ability to repay, I think it just formalizes it. I'm a pro-business, and, you know, people poo-poo regulation, but Dodd-Frank's not bad. I mean, there's a lot of great elements to it that I think have protected the industry and our economy at large.
Agree. Listen, I mean, I think if everyone was willing to put their name behind their companies and stand behind actually, you know, the loans that they're doing and took the same level of responsibility that you did, I don't think we would need the things that Dodd-Frank brought about us. But we know actually, you know, there is greed out there, and it's whether the borrowers wanting to buy more house than they can afford, or, you know, Wall Street wanting to make money any way they possibly can, or investors looking for a yield, not caring about where their yield comes from. There is something to be said about having some safeguards in place to make sure actually that we're not going too far. So the other thing I want to talk to you about is so your entire career, whether it's you being a mortgage broker or servicing the mortgage broker, what do you love about the mortgage broker? And I have to assume it's going to go back actually into your days. Your roots are in New York City. Working with consumer brands, involved in marketing, and you're still today involved in marketing, coming up with some cool actually marketing campaigns that just stand out from the industry. So what is it about the mortgage broker that you love?
I love the independence. I think it has always allowed me the ability to be a business owner. Even when I was 23 years old starting out, it was my business, and that was the extension. The joke I always use is I'm nothing more than a glorified loan officer. I might have the title of president, I might go to meetings and have great interviews like this, but I'm still a loan officer. I enjoy sitting at the table and looking at a deal and talking to someone and sharing with them why I think it was a good deal. Sometimes I've gotten up from those tables and said, it's not a good deal. And to your point, to my roots and my marketing and differentiator, I want to stand out from the crowd. And that's why I went with more of a, whether you want to call it B and C, today we call it non-QM, is because there's a differentiator. Meaning, like, if I go to a party and there's all these bankers there, well, oh, I have this rate, I have that rate. Well, now you're just selling your soul for the lowest, basis point. But when I say I can do loans that other people can't do, it really differentiates. So that's why I've always approached the business of doing things all credit considered was a great tagline, was a great advertising line. Yep. I want to stand out from the crowd. So you see a lot of our competition coming into the space, and they're just trying to replicate what they did in the conventional world. And these are not conventional loans. And that's where I think our expertise and our history gives a differentiator and understands the client and the product much better, because you can't apply the same logic that you do to a true conventional borrower as opposed to a self-employed borrower, foreign national, ITIN. The clients that we have and that we service, they're different from those. And that's, the agencies are set up to take care of the 60-70% of the clients, but there's about 30% of the world that doesn't fit in that box. And that's where I'm proud to be part of the growing non-QM, community and industry that will service those people.
Fantastic. So listen, one last question. I got to ask you this. I'll put you on the spot. I know I gave you a little briefing about what I was going to ask you, but I want to put you on the spot about this. So listen, I don't think there's any regrets, because we learn from everything we do. Whether it's a decision that we turned out to be the wrong decision, we did the best decision we could at that moment. But are there any missed opportunities that you look back in your career that if you knew the information that you knew now, that you would have done differently?
It's a great question. And, I feel fortunate to be in the spot where I am. So it's hard to second guess over 20 years to still be around and grow and build. So from there, I overachieved with my wife. So there's definitely no other woman that I missed out on an opportunity. Oh, business-wise, I did miss an opportunity to invest in a company that didn't look good to me, but if I invested $50,000, that would have returned me $10 million. So that's probably my biggest.
Wow. That's great. That's awesome. Awesome story. Robert, I'm glad actually we had a chance to tell your story. So if you haven't seen actually the copy of the Mortgage Press that has Robert's full story in it, make sure you go on to nationalmortgageprofessional.com. You'll be able to see the whole story, and make sure you get a hold of Robert. Do business with ACC. Great company. We've worked with you guys for many, many years. Thank you so much for joining us, Robert.